Day trading, it's all the rage. Plenty of platforms. I'm sure you might have been involved with it. You've heard about it. We're going to talk about whether or not that should be a part of your overall investment planning and what a financial advisor would say about it. Today on Mindset with Brad Barrett. Let's go. Welcome into Mindset. I am Brad Barrett. As always, we have producer Jared and the lovely Kira. Today we're going to be talking about, what are we talking about today? Day trading?
Day trading.
Day trading.
Day trader.
I feel like isn't that a Beatles song? Or
Day Tripper.
Oh.
That's a good one.
What are you going to do?
Anyways.
Yeah, parody.
Day trading.
That was good.
So here's the point. As an advisor, day trading is something that comes up often. Just to be clear about something, the question really is around whether or not a financial advisor is for day trading, likes it. I have some points to make. As always, I'm probably going to give you more words than you want and way more dissertation than you're asking for. You're just looking for a simple yes or no, but that's not my style.
Yeah, I'm very curious about this because I have so many friends that are doing this. This is getting, the Robinhood, they got the apps, they're checking it. They're checking notes when we're hanging out. I mean, my nephew's doing this. He's in his, early 20s. Mm-hmm. I know a lot of college kids are getting into this. So like the views of an actual financial advisor has on these kind of things.
So
I'm curious about.
I got a couple things to say about that. So for all of you out there that want to, really ask an advisor whether or not he likes day trading or believes in it or thinks about it, the short answer is no. And today's episode is going to be about that. I want to describe to you why.
Yeah, very curious of the whys on this.
Here's the thing, stay tuned here because it's not for the reasons you probably think. It's not because, it's not what I do or it's not what we do as a firm. It's none of those reasons. We'll get into some points here in a minute, but to start out with, the biggest thing that I want to share openly is, to me, it's not what investing is. Investing is generating wealth through time, through discipline, through investment, through proper diversification. That's how you create sustained wealth. Because remember, in this game, I'll call it that, right? It's not always what you make, it's what you keep.
Yeah.
So you can make something instantaneously through a day trade or a quick trade or something like that, but keeping it's the bigger part of this. Because people forget this point. You might have did some research and got lucky on something, invested in something for $10 and it shot up to $20 the next day, right? But it's not going to stay there. Now it might go higher, it might go lower. So the point is, to me, investing is really your protection for your tomorrow self. It's investing in your time, buying back your time later while you're in your accumulation phase of your life, your 20s, your 30s, your 40s, your 50s, even your 60s. You're building your career, you're saving, you're going through all that kind of stuff, right? That's where you want to generate wealth, and that's where you do through discipline, investing, and having a longer-term approach. And day trading is the antithesis of that. It's literally short-term approach. Now, I should say something because people are going to get on us on this one. We keep using the word day trader, and they're like, well, I'm not doing it for a day. There's no specific description of this, but to me, as a financial advisor, day trading is anything you're turning over consistently.
Do we have a definition?
We do have a definition. Day trading is a high-risk investment strategy involving buying and selling financial instruments within the same trading day with the goal of profiting from small price fluctuations. It's characterized by rapid transactions and significant capital risk.
That description even said the single same day. And that is true. Some people do that. That is real short term. But I'd expand that a little bit. My experience has been that you might not hold it for a day. You might be thinking, oh, I'm going to hold it for a week, or I'm going to buy it now and then I'm going to wait for the next quarter, returns or something like that. All of that to me is in the camp of day trading. Okay. All of the camp doesn't have to be a single day.
So short term.
Short term. And look, there's no definition that everyone agrees upon when it comes to short term. To me, anything less than a year or two is typically short term when it comes to investing for a long haul. We make trades all the time for different reasons within a year or two. That's not the point, but we're still holding the sector rotation, the value-driven approach we're taking to it for a longer term goal. So what we're really talking about, to get specific, is you're buying a stock in that day for some reason that you think, and you're going to sell it the next day or the same day or a week later, something really short term. Basically, you're going into it thinking you know something that someone else does.
So do you think people are trying, when they day trade, they're not trying to hit those sustainable base hits? They're going for home runs every single time?
I would say so.
Okay.
I don't know if the people would call it, I'm sure the people are going to comment on that one. I'm not sure they would call it home runs. No, this is strategy and swing trading and this, that, and the other. And look, I'm not going to say there's volume trading, there's VIX trading, there's swing trading, there's, you name it, man. You're not going to shock me or scare me or surprise me on something that I haven't already heard in this space, okay? With regards to that, I'm not saying any of those things are right or wrong or indifferent. What I'm saying is that that's in its own camp. just like the gambling environment was. That's its own thing.
Well, this to me fits, and this is why this.
Yeah.
In fairness, I'm not a day trader because of my philosophy that I think this specific day trading is that more gambling style of like, oh, I get a tip, this company may get this. I'm going to go quick buy stock. I'm going to check it tomorrow. Oh, it shot up. And you're constantly playing these things.
Yeah.
And it's more the philosophy of that gambling of getting that win. It's short term. It's, oh, let me hit. If that goes down, I'm out.
And I think well said. The notion of investing, if we have that idea or that methodology going into it as day trading, it's not really investing. That is risk taking.
Right.
And by definition, as we read last week, the definition of gambling is taking a risk for an expected return. But the expectation of that is immediate, it's quick, and it's not probable sometimes, right? So yeah, you might get lucky and hit a trade on that, but you are gambling. In my opinion, that's a hot take a little bit, but like if you're day trading, you are gambling.
We talked last week a lot about the risk.
Yes.
There's a higher risk in this short term doing it this way than there is in the long term.
There is, because the long term, there's a long term that can encompass a whole bunch of things that can help it, hurt it, and smooth it out. Whereas you bring all that same stuff from 20 years, let's say, into like a day period, one little thing can happen. All of a sudden, more factors are involved. Boom. The whole strategy, the whole methodology you might have just gets blown up.
Yeah.
Right.
And on that risk, in the United States, approximately 450,000 people participate in day trading, and yet
That's crazy.
statistically, a mere 1% of day traders show long-term success over a 5-year period.
Wasn't the gambling stat higher?
Yeah.
You're literally at better odds of winning at gambling than day trading.
I was going to make that correlation. Go watch last week's video. We made this correlation there.
Studies show that approximately 5 to 15% of long-term investors experience losses, compared to one study found that 96% of online gamblers lost money, with only 4% making a profit.
Yeah.
Oh,
Now
really surprises
well,
me.
it does, but it also proves your point that you were saying this, And there's definitely been camps of people that have done this. There's the stories that I've heard between, Soros was one that always was. When we talk about a story on Soros.
So George Soros made $1 billion in a single day in 1992, betting against the British pound, forcing them to take it off the ERM, which I don't totally know what that is, and sending Black Wednesday into motion.
I'm not going to go into details on that one, but just know in economics, Soros is kind of known as like how do I say this politely? He's a little bit of a snake in that regard. He manipulates, right? So this is a guy who was already a billionaire at the time.
He allegedly?
No, that's what he did, but like that's a little like skirting the lines there a little bit. I mean, there's other ones too. There's what's that YouTube guy that was like talking
Ross
about
Cameron?
Yeah.
Yeah. So he was inspired by the Great Recession, started with a small inheritance of $583 and built it into $10 million. And now he shares his insights on YouTube.
See, that's cool. Now, here's the thing that I would say. I don't know much about this guy.
Pretty good.
It's pretty good. So, no, I'm not going to knock that at all. So I want to be clear. I'm being fair here. I'm not knocking and saying it's never going to work.
There are winners in
yes.
it is, yeah.
And I have not watched his YouTube channel, and I have not seen any of what he said. But I would argue that he is reinvesting in strategies and probably has changed his strategies a little bit over time. Like he's not, because otherwise that would prove out a little bit that he'd make a bad trade at some point and it would watch it. It also probably tends to reason that I bet you he's not putting all of it that he earned from the previous day's trade to the next one. Yeah. So there's some strategies you can put in place here, to be fair, right? I mean, we've been talking about them, but there are also some famous losers too.
Some famous losers.
The Jesse Livermore one is always the one that.
Is this the guy from the Great Depression?
Yeah.
Yeah.
It's kind of sad, but.
He was a legendary trader known for both enormous gains and devastating losses.
He's the rags to riches story.
Yeah. He lost his entire fortune, estimated at $1 million, which would be worth billions today, not once, but multiple times throughout his career.
Fumbled
the bag.
What's not on that stairs, he also committed suicide.
I remember reading that, yeah.
So it's a sad reality that anytime you're day trading and doing any volatility like that, you're heavily relying on emotions. And I'm going to talk about that here in a second, because that's what I really want to come to today.
Well,
you're heavily relying on emotions, highs and lows.
I was just thinking, what's the mindset once you get in that time period billions? You're like, I'm out, cool. But he's going after more and more and more, wants to stay in the game. Like that's not economics, that's psychology.
Well, what's interesting
100%.
is biologically the same part of your brain that fires and goes off, like when you have a big win in gambling, is the same part of your brain that goes off when you are investing. So they
and
are.
when you take a hit of crack.
Yeah, there's a lot. So the dopamine centers, the amygdala, the fear center, there's things that the frontal lobe of decision making, these are all things that are awake when you have things like that going on. And it doesn't know how to differentiate between a gambling win, an investing win. But there is a lot to the body and the mind when they talk about, here's a stat I always bring up. Most people, and anyone who's been in the market, whether younger, older, experienced, doesn't matter. People tend to talk about the $1 loss more than the $10 gain. You ever thought about that? People always talk about, oh yeah, man, I lost it big on this one thing, one time. It's weird. It's almost like a psychological thing, but they're not going to talk about the success that they've had for their entire career. And I think there's a lot to be said about that. When you have a loss, you're trying to get over it and make up for it. In a Livermore case, it is 100% psychology. And this is what I always say. You are chasing a ghost. If your entire life and identity is around money and growing money and day trading and thinking it, you're not going to be happy if that day trade hits.
Right.
Before we end, I want to talk about this emotional thing because I got to round this out because there's a lot of biases that come through on this one. Okay, and I think this is key. And I rewrote some of these down. Some of these you might heard of, and we'll make some bridges as where we can. But there's a couple things. The first thing I want to bring up is this dopamine thing. I keep bringing up. Dopamine and serotonin are the feel good, right? We've heard this before, and this dopamine loop is a real thing when it comes to day trading. I've seen it firsthand with my clients, with experience, and I want to read this correctly, right? But day trading can mimic gambling, like we just talked about, which is what? High wins, crushing lows from losses potentially, right? And that losses through experiences often triggers over trading. This is where this comes in, right? Think about gambling, trading, or a bad trade. Like, oh, I lost here, I'm gonna double down. Or I'm gonna move that loss over and put money I didn't say I was gonna invest over here because I'm gonna try to make up for that loss.
Back to the ATM for more to put back.
It's
more.
no different in day trading. So this dopamine loop, we get this bias that our brain is telling us, like, oh no, okay, that you didn't do, because we're designed to make sure that we don't fail. Our brain is designed to say you're still good. And so if you fail at something in that day, you made a bad trade, the brain's going to try to say, well, here's how you get out of it.
Right.
You go back to the ATM, or you put more money in and you buy something else, or you double down on that.
Double the next, it'll make up for that.
Right?
Yeah.
Careful of this bias. Careful of this dopamine loop. It's a self-fulfilling prophecy. It's going to chase this feeling, and it's going to steer away any bad feeling.
Check your emotion.
Check your emotions. There's an anchoring bias that brings up. I bring this up with investing is a lot too. This is where we have an over-reliance on some piece of information, right? This is the day trader's like dream. Oh, I feel like I had this information. Oh, I know something that someone else does. Which, by the way, let's be fair. You don't think someone else doesn't have this information? Or it's not been public news for a while?
I got the hot Instagram tip. I saw.
Yeah, like, you know what I mean? I've seen these guys talk about this. Oh, people don't know. I'm like, if it's public on a social media, people know. So you're not the first.
You're the last to know.
Like, yeah, it's like,
not the
dude.
first.
And I'm not trying to be mean. I'm like, dude, think about this logically.
Right.
Bring some rationale into this, okay?
Call them out. Yeah, and then
It's
confirmation bias starts to come in, where we seek out information that supports those pre-existing beliefs.
That's I call it the validation promise. You're trying to validate what you think you know. Mm-hmm. Again, this is the brain's loop. So yes, emotions and psychology come into investing, but I talk about that a lot in general investing, but when it comes to day trading, this is a tricky one. Because this is really close to these things we're talking about. And you got to be careful of these things. The dopamine loop, the confirmation validation, the anchoring bias. These are all real things.
This reminds me of our show we did earlier in the year. Are your emotions affecting your investing? And
I like that one. It was a good one.
It was a good one. But some of those, when you're on that long-term path, they don't affect as much. But it sounds like this short-term stuff, it affects it exponentially more.
It does, because everything's heightened. It's all in a very, very short time period. You're feeling your feels fast.
Right. And we know feelings aren't always right.
Correct.
Oh.
Well, it's also, this is all, we all struggle with this, but the day we start, not making decisions based on our emotions is the day we'll all start thinking a little more logically and rationally. But that's a hard thing. We're human beings. We're not robots. We talked about this in the AI episode, right?
Emotionally driven.
This is how God designed us. So we just got to check it.
Right.
And, there's two other things I want to bring up, and we'll wrap this up here. This one's real. And again, this is going to hit on the chin, but ego.
Yeah.
We got to talk about ego.
Check your ego at the door, buddy.
Easier said than done. day trading is a tough one because it's checking your ego real fast right away. Like you would have a validation process of an ego on a long-term investment that might be drawn out over 10, 20 years. But on a day trading environment, a day, a week, a month, a quarter, something like that, your ego's getting checked left and right. And this is that loop I was talking about where it's like, no, we can't feel down on our ego like we did something wrong. We got to go back into this, right?
Right.
It's a real deal, right? Which is this confirmation bias that you just brought up. It's totally real.
Yeah, I mean, some people's egos, if I lose, are not the like, well, I need to fight. I'm not losing.
Correct.
And you'll start putting so much to get the win. It becomes less about the money and more about like the being wrong.
Yes. And as soon as you veer off of that track, you've lost sight of what you, again, general speaking, day trading isn't bad nor good. It's indifferent. It just is, right? But when you get off the track and into these camps, is that's when you start getting into, you've lost track of the goal, which is maybe try to make some wealth for yourself, which is great. Good for you, right? But you got to keep yourself emotionally back on track with these kind of things.
Yeah, like you always talk about like the why you're doing what you're doing with your money.
I think it's a constant thing to ask yourself. Like if you're day trading, ask yourself why you're making that trade.
Yeah.
Here's the thing. If you're doing it, you're like, well, just to make money. Okay, great. Just know by doing that, you are taking on a bunch of risk in a very short time period. Just know that. That's all. I'm sure you're like, oh yeah, duh, Brad. What do you think I do? Don't know it? I'm not, look, again, check your ego. I'm just bringing it up, dude. Then there's a loss aversion. That's the last one. So loss aversion. So traders or day traders, they tend to fear these losses more than those gains. They're so fearful of those losses that they forget any gains they've had. So this is where the livermores get involved, those kind of things where they just get so myopically focused on. They might have 10 wins and 1 loss, but they can't get rid of that 1 loss. And by the way, if you think you're immune to that, don't forget day trading or investing. Look at your life. You're a good person, but there might be one thing that you maybe did wrong in your youth or something like that, and you're still focused on that. You don't think that plays into your everyday life on some things? I know I've struggled with that before.
That embarrassing moment that still haunts you.
That still haunts you.
That's the worst. Like when that pops up every once in a while.
Yeah, and it rears its ugly head at bad times, and you stress out over it. That's where anxiety comes from. Then you kind of think lesser than, you forget your worth. There's just so much stuff going on here. So this is a real thing outside of just day trading. This is biblical. I mean, Jesus literally talks into us about this, that no, just to be clear, you might do wrong, but your worth is in me. Yeah. Right? And so it's important for us to understand that. And so if we lose sight of the whole day trading environment, we get super myopically focused on this loss aversion, we then get into the difference between hope and despair, which is tricky. Yeah. And there's a lot of people I've counseled before who've had big losses on some trades, and they just and it's less about the money. It's more that they feel like they failed. They failed themselves, they failed their family, and worse off, they were doing it for these other reasons I brought up. They were doing it as a void fill, not realizing they were trying to make up for a wrong that they might have thought of themselves later. And it was self-validating that they're a dirtbag because they failed here, and it just validates what they thought they did 20 years ago. You don't think it's connected? Trust me, it is. Yeah. Day trading's a tricky one, guys. You didn't think I was even talking about that today, did you?
Yeah, a lot of psychology.
There's a lot of psychology in investing, as always, but for some reason, day trading and gambling, this whole thing, there's subliminal things going on here.
Yeah.
And if you don't like any of that, disregard it. I'm just telling you from experience, my own personal life, as well as managing a lot of clients and studying this, reading on this kind of stuff. It's real. So
yeah,
just think twice before you go into day trading is all I'm saying.
I think I'm just going to stay away.
I hope you guys enjoyed that today. We did. I know we got a little deep on that one, but day trading is just something I think you all should be aware of. It's out there. It's everywhere. It's everywhere. Just check yourself on a lot of these things and just know that, there is another world for longer term investing and strategies in place for those kind of things.
Be careful, and disclaimer, you may not realize you need the disclaimer for this, but if you have that addiction, if it's gambling, you just transferred it over.
Yeah.
Get help, talk to somebody.
It's big. As always, thank you to our subscribers. We're so grateful you watch every week. If you guys sent this video or you just found us, we come out with weekly episodes talking about all things, psychology of money. As a financial advisor for, over 2 decades now, we talk about a lot of different theories and subject matters as it relates to money in the world of investing, as well as what I talk about with my clients. So we put out weekly episodes, and we're happy to have you tune in. As always, until next week, if you lead with love, it's going to be all right. See you guys.